Stronger US services activity is shrugged off because the rate cut hopes have increased off the back of a cut by the Bank of Canada and expectations that ECB will also cut tonight as Australia's economy hangs on to growth just boosted by stronger household consumption. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ senior economist Birch highlights work Australia's Fair Work Commission is undertaking on the gender pay gap.
These sectors are only going to grow. They are an incredibly important part of the Australian economy, not just because of the employment and activity side, but because they ensure that people have quality of life and good health.
But first, in 5 and 5 with ANZ, global stock markets strengthened overnight as confidence grew that the Fed can cut rates this year. The S&P 500 was up 0.9% at 4 a.m. Sydney Melbourne time, while US Treasury yields were down another 3 to 4 basis points. The US dollar index was up 0.2%, with strength particularly against the yen, up 0.8% at 156.13 yen to the dollar. The Aussie dollar flat at 66.43 US cents, while the Kiwi was up 0.2% at 61.89. Rate cut sentiment was boosted by the Bank of Canada, cutting its key rate by 25 basis points to 4.75% overnight. Along with expectations, the ECB will cut tonight. ISM data did show the US services sector activity expanded the most in 9 months in May, although ANZ economist Bansi Madhavani says the headline figure masked some underlying weakness.
The breakdown showed that the increase was very narrowly concentrated, with business activity subcomponent rising at a record pace. But other subcomponents suggested that activity is quite subdued. We saw employment rise, but it remains below 50 level, and that suggests moderation in services sector jobs creation. Prices paid fell, new orders rose, but at a slower pace. So net-net, we thought the data suggested that economic activity in the US is slowly rebalancing amid a restrictive monetary policy.
Number 2, Australia's GDP rose just 0.1% in the March quarter and was up 1.1% annually. That's slower than in December. Private business investment and dwelling investment fell. But as ANZ senior economist Blair Chapman explains, there was some unexpected strength in household consumption, which might grab the RBA's attention.
The economy is slowing. We're expecting that to occur. I think the surprising thing was actually consumption. We expected household consumption to be pretty flat. We actually saw revisions through quite a number of series this time around, and one of those was household consumption, which was revised up for Q4, and then it grew 0.4% quarter on quarter in Q1. So households, based on this revised data, are actually looking a little bit more robust than they were before today's data.
Number 3, the ECB is expected to cut its key policy rate by 25 basis points to 3.75% when it meets overnight. ANZ head of G3 Economics, Brian Martin, says a key question is what the guidance will be about further rate cuts.
It's not given that the ECB will follow a June rate cut with another cut in July. Wage inflation still remains above levels that are consistent with a sustainable reduction in inflation. And although wages are falling, some of the more hawkish Governing Council members will actually want to see a further improvement or being comfortable that rates can be cut further. However, other more dovish members are keen to keep rate cuts on the table.
Number 4, the Philippines CPI rose 3.9% in the year to May, higher than April, but below expectations for a 4% rise. ANZ economist Arindam Chakraborty says the increase was driven by transport and utilities costs, while food inflation remained elevated. Core inflation, though, decelerated.
Risks to inflation remain tilted towards the upside and may even breach the official 4% target in the coming months. However, we expect headline inflation to fall back within the central bank's 2 to 4% target later in the second half of 2024. Therefore, we think the BSP will keep its policy rate on hold at 6.5% for the remainder of 2024, and the first rate cut is likely to be carried out in the first quarter of 2025.
Number 5, New Zealand's merchandise terms of trade rose 5.1% in the March quarter from December. ANZ agricultural economist Susan Kilsby says the improvement was mainly due to falling import prices.
We saw prices come back across all the major categories, but certainly petrol was the big mover, so it was back 13.6% on the previous quarter. Imported food prices were also down 2.9%, and manufactured goods, things like steel, plastic, clothing, collectively fell 2.6%.
Susan Kilsby there. Now, in our bonus deep dive interview, following this week's decision by Australia's Fair Work Commission on minimum and award wages, ANZ senior economist Catherine Birch spoke to my colleague Alex Tarrant about the Commission's work on the gender pay gap and also, more broadly, how Australian wages are tracking.
The Fair Work Commission also announced that it will be looking into gender undervaluation in a number of awards in the healthcare and social services sector. So this could be similar to the case the Fair Work Commission looked into on aged care, where it found that the pay and conditions in aged care awards were not enough or were not good enough to reflect the skills and experience that were required by those workers. So it really came to a point where the Fair Work Commission said the pay and conditions in the aged care sector are not good enough, and therefore the Fair Work Commission awarded a 15% increase to direct aged care workers, which was implemented from the 30th of June 2023, and subsequently they awarded an extra up to 13% for those direct workers and around 6 to 7% for indirect workers, with the timing of those payments still to be confirmed. Now, that was the start of it, and now the Fair Work Commission has broadened its scope to look at other large female-dominated sectors that may have been historically undervalued. And now the aged care decision and these potential future decisions on sectors like childcare and disability home care and things like that, they are really important because these sectors are only going to grow. They are an incredibly important part of the Australian economy, not just because of the employment and activity side, but because they ensure that people have quality of life and good health, particularly on the mental health side in some cases, so psychologists will be included in that. And that really is important for a well-functioning economy. So in order to be able to attract and retain the skilled workers required to make sure that these sectors are working effectively is really quite important overall.
Just looking at the wage award system more generally, just take us through how that works.
So the Fair Work Commission conducts its annual wage review once a year, obviously. And so that's when the award wages and the national minimum wage are actually reviewed. And that's when changes can actually be made by the Fair Work Commission that must be implemented by employers. So that's only once a year, really. And that's one part of, the reason that we have quite a bit of rigidity in how pay is set in Australia relative to some other countries. And was a key reason behind wage growth taking longer to accelerate in response to tighter labour markets and higher inflation in Australia compared with some other countries. So the US saw wage growth start to peak in early 2022. New Zealand saw their labour cost index start to peak in early 2023. And we think that Australia's wage price index only peaked in late 2023. So that wage cycle has been quite lagged. Now, the once a year review of award wages is certainly part of that, but there's also quite a bit of rigidity that comes from enterprise bargaining agreements in Australia. So these are collective agreements and they can be locked in for 2, 3, 4 years. So there's actually still workers in Australia who have been on their current EBA for a few years who haven't seen larger wage increases in that time that would reflect that tightness in the labour market and higher inflation. So there's still a lot of workers that will be rolling on to new EBAs that do have larger wage increases, and that's going to contribute to wage growth being reasonably sticky and only gradually declining despite what we're seeing with inflation coming down, the labour market loosening and the economy slowing overall.
Catherine Birch there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, June the 6th. Catch you tomorrow with the ECB's rate decision. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.